Going to get a spoken word on the stock market now with our chief equity strategist, John Blank, who joins me via Skype from his comfortable digs out on the West Coast in Los Angeles. John, a lot of talk here about spring swoon, summer sell-off as we move into through May and into June. Are you looking for any kind of a summer sell-off in the market?
Terry, I was up until the announcement of the Japanese quantitative easing, but the objective of Japanese quantitative easing is to raise asset prices, and that is affecting us. And I don't think with that support that we're going to get much downside here.
All right, in your June market strategy piece on the website, you talk a little bit about the stock market showing us a positive feedback loop. Give me a little bit more on that. What does that mean?
Yeah, well, one of the things the Federal Reserve is doing is they're driving up the stock market to stimulate the economy, but it's not having an even effect, Terry. It's having an effect primarily on the consumers, and we're seeing strong consumer growth, so we're seeing strong consumer discretionary stocks and strong consumer staple stocks and strong retail stocks. And we're also seeing a strong banking system that's focused on the stock market, with its merger and acquisition advisory, investment banking, asset management. Those types of firms, even insurance companies, are doing fairly well in this market. So between consumers and the finance sector, that is what is the feedback loop that's taking us up in fundamentals to match up with that stock market that's rising.
Okay. A lot of people saying, you know, there's really no reason fundamentally for this market to keep making new highs. How do you feel about that?
Terry, I think you've got to argue specifically from the latest labor market data, particularly the claims data, as it tightens up, and that's the most recent data we have. It has given the stock market genuine support. And all you have to do is look at a chart of unemployment claims for the stock market, the S&P 500, to confirm that. It's a very, very clear and very direct relationship. As long as that's in place, we're going up.
All right, you've got some stock picks that you want to share with us that kind of illustrate that feedback story you spoke of a moment ago.
Yes, I do, Terry. I want to get people interested in Brunswick Corporation, ticker BC. This is a four-segment leisure provider. It does boats and marine. It does fitness centers and bowling. And this is clearly a stock that can follow that consumer discretionary trend up further from here. And it's all very high beta stuff. So if it turns around on us, it's going to go down fast too. But by and large, if you like the upper upside of the market, you like a stock like BC. I also like Alliance Bernstein, ticker AB, which is a $450 billion asset manager for pension funds and individuals and other groups. They have a clear relationship and benefit to the stock market returns that are coming in, and they will go higher. And they also offer a 6% dividend yield right now, by the way. The third one I'd throw out there is a company called Greenbrier Companies, which is GBX, ticker GBX. They're a smaller company, but what they provide is services and support to intermodal type railroad activity. This is an area, if you like a Ryder, if you like any type of Swift or any other type of trucking company that's doing well, you're going to like Greenbrier because they're putting those trucks on railroads and helping them out. So that's a third pick that's also somewhat of a consumer pick because the trucking industries go up with the consumer industries.
Do you own either of those yourself, John?
No, I do not, Terry.
All right, the latest spoken word on the market from our chief equity strategist here at Zacks, John Blank. And with John, I'm Terry Ruffalo.